Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Thursday Market Webcast. Okay, daily chart, and this is the March. This is not the continuation chart. This is the front month contract, and what you can see here is we're on an upper Bollinger Band ride. And it's 1, 2, 3, 4, 5 days. You've had some attempts to push things down this week, and every one of those dips has been rejected, but they're not really getting rejected into spikes that are consistently running up higher and higher. It's more they're running back up into flat areas that want to grind and chop and bore you out of the tape, which is very typical for the week between Christmas and New Year's. So we just put up on the blog, we talked about the hourly chart and the daily chart, and one of the things I mentioned was the key. There's a few keys to holiday trading, if you want to call it. One of the big ones is knowing when not to trade. If you find yourself being very anxious to trade and overtrade and try to do too much in tape that doesn't want to go anywhere, where you're trying to create excitement where there is no excitement, it will end up being exciting. It'll be exciting only for you and not in a good way. So you need to avoid that, because what you'll do is you'll put yourself into a position as we get into January where the volatility is there, the market does want to move in whatever direction, it doesn't matter, but it's going to want to do things. And you're going to find yourself physically and mentally depleted on the capital side, and that's going to affect your trading. So there are opportunities in this tape. There are a couple few a day. Yesterday, it was really a situation where they lulled you to sleep, they talked you out of it, and then all of a sudden you would get the 8 to 10 to 12 handle whip, and then it would flatten right back out, which is a very difficult tape to trade in any situation, but especially the week between Christmas and New Year's, it becomes a very tough look. We have 2 days left in 2023. We've made new all-time highs on the mini. We have not made new all-time highs on the SPX on the cash. If they're going to try to do that before the new year, then today into tomorrow, you're going to continue to see any kind of a dip defended, while at the same time, instead of the flats up top, you're going to start to see what I would say is probably a very slow bleed, maybe into some volatile moments, but it's going to be very muted. It is not going to be what you want. It's going to be what you get. And you're just going to have to trade what you get. My strong suggestion is taking profits, rolling up runners, capturing what you can, making your number. For us in the room with the subscribers, that's 4 handles a day on average, making that number and moving on to the next day. Otherwise, take a quick look here at the hourly chart for March. Otherwise, what you're going to do is you're going to get a little bit, then it's going to flatten out. You're going to get round tripped on things when they come back and try to defend stuff. It's just not going to be what you want it to be. And then you're going to overtrade to get back in, and then all of a sudden a number that you had made is no longer a number that you have made. And you're just kind of stuck in neutral. If you're in that pattern and you can't really get out of that pattern, then this is the week to say, you know what? It's been a good year. This is the week between Christmas and New Year's. I will catch everybody in January. There's no shame in that. The reason the market is doing what it's doing right now, as far as volume, volatility, and things like that are concerned, is because the people that push the vast majority of the money around have already done that. They're done. So banging around on your mouse, trying to turn nothing into something, typically is not a good thing. All right, very briefly here, hourly chart. I'm on my laptop, so this chart's probably an hour old. You can see through Globex, we went ahead and we spiked up 48.24 quarter, which is the high of the moment on the futures. Yesterday's regular session was here, and you can see little false breakout, couple of false breakdowns, and then they really, I shut things down with the room for the day, and then they went ahead and spiked that 10 handles. But that's the stuff you just have to let that roll off your back and move on. Little steady move up into the Europe Open. back. I should say the Asia Open. No, wait, that's Europe. Nope, it's not. Europe sold it, and then we've been living below the hourly bid band now, going on 6 hours. So 48.16, 48.17 is going to be important off the Open. We are getting comfortable above 4,800, which for me, intermediate term, long term, is the biggest takeaway for the week. If it stays comfortable above 4,800 and continues to be comfortable bleeding up to new highs, then that cash price really can't help it but get up above there itself and print a high. And then whether that's too much or not enough, that is probably a question for January to sort out. So again, make your number, get to the next day, don't do any major damage throughout the course of the week. That's the key. A couple days to go. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. If I don't talk to you, have a very happy new year. From everybody here at Princeton Trader, all the best, and we'll see you in January.
Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.